Hey, welcome back. Hxro Labs Live, episode 88. Coming up on the big hundo pretty soon. A couple weeks. We got Rob Levy in the house today. How's it going, Rob?
Hey, going great. How are you, buddy?
I'm pretty good, man. Our pre-stream chat has me feeling a little flustered. I'm like, holy shit, we're going live now.
Okay, we're going live.
Yeah, we're here. Every time we get on a call, we just start talking trading, and I can't thank you enough for everything you've taught me. I have literally made money just hanging out with you. So I'm really happy to have you here today to share with us what you've shared with me, and we can kind of put it all together, hopefully in a way that people find value in. I think it's pretty much a certainty that people will appreciate what we've got in store today. So let's check the chat. We got Linus, good to have you back, and Kawark, and Brian, and Kiverkiveli, and Boris. What's up, guys? How's it going? Congratulations on the cool car, RT. Thanks, man. Yeah, Audi SQ5 2021. I'm a noob, though. I went and tweeted it. I didn't have a picture of the one I got because it was dark out, but I was so excited I wanted to tweet it anyway. So I Googled 2021 Audi SQ5, and it actually gave me a picture of a 2015. And I'm not a car guy, so I didn't know the difference. So a couple guys were like, am I missing something, bro? That's a 2015. So there you go. But it is a 2021. It's super sweet, and I don't even go outside much, so it's kind of a lull, but I will once it's summer out. Okay, today we're going to talk about Bitcoin. Nice little shakeout this morning. Visit to the Pump Chaser Zone, our favorite place to play. Could be continuation downwards for a little bit. There's a little bit of cheat cleaning up on the chart to do. I mean, even as low as 41K, take back the Elon pump, wash out some late hands. We'll see. I don't know. Altcoins are reacting very bullishly to the bounce initially, so I don't really have too much fear in my heart, but we'll be keeping a close eye on that. We'll get through that today. You know, you can see behind us the Bitcoin dominance bouncing down from the trend line. Altcoins are just so strong. ETH BTC bouncing off the Pump Chaser Zone, off of this breakout level. It's just a good time to be here. You know, even Rob this morning, I think it was last night or this morning we got on the call, it was just like, just what a time to be alive. What a time to be alive, and directly in the middle of this market. It is so exciting. And 2017 was like mind-blowing, but you know, for me it was like, oh, what is this thing? And now it's like, aha, I see you coming, and here we are. So thanks for joining us today, guys. We got 31 of you here on YouTube. If you guys are joining us from Facebook, CCI, Cryptocurrency Investing, welcome. Good to have you. And Periscope, if you're on Twitter, what's up, fellas? Got Toby in here, says you guys look like sports pundits. Rob?
Love it.
We made it. When Rob first reached out to me last year about Hxro Labs, he says, I want to be the ESPN of crypto. And it's been, what, 10 months, and we got our first kind of comment regarding that. So I feel like that was a really big shout, Toby. Thank you for that. And what better way than to have Rob here on the show when we got that comment? We made it. So, you know, let's start.
A dip for ants?
Yeah. Yeah, let's start with what are you seeing in the market, Rob? I mean, you see the market differently than me, and just to give someone a background, you know, when I talk to Rob, I have to take a notepad. I get a little cross-eyed sometimes. My head spins, you know, because he's talking about futures contracts and then perps and spot positions and options and ways that you can mash all of those together and find little spreads in between, and basically what sounds like just locking in, I don't know, guaranteed profits is not the word, but just like you're trading this spread where it's like you'll just capture what's in the middle there, and there's these inefficiencies you've spotted. I mean, how do we even start with that conversation?
It's a great conversation. It's one that we have all the time. I think one of the main takeaways from that conversation, which I get so excited about, which makes me feel there's something special in the market, is the idea of the risk-free rate that is trading in this crypto market right now. There's a few ways to kind of think about what the risk-free rate is. One would be, can I lend my coin, whether it's stable coin, USDC, USDT, or whether it's a Bitcoin or ETH or other coins, can I lend my coin for a healthy rate? And, you know, lending, if you trust the counterparty or you trust the platform, it's relatively risk-free. I know, okay, I'll loan you my USDC. You're going to pay it back to me in a month or 3 months or whatever it is. And you're going to give me some interest, some yield. And that yield, that return is like this risk-free rate. And the risk-free rate also exists in the derivative space. So I look at, well, where's Bitcoin trading right now? And I look at Bitcoin USD, the spot market, and it's trading about 45,150. And then I'll go look at, okay, where's the March future trading? And the March future is trading 47,100. And you're like, well, it's already February. March expires March 26th. It's only like 44 days away. So you're telling me that the March futures contract is trading $2,000 above where Bitcoin is trading? You know, what gives? And it's a great question, because on March 26th, the March future is going to be converging with and going to be the same exact price as spot Bitcoin. So that's like $2,000 of premium in there that over the next 44 days is going to vanish. And then we can calculate, what is that premium in dollars and cents? What does that mean in percentage terms? And then we can get down to, well, what is the risk-free rate in the Bitcoin market right now for 44 days? And you can come up with a number. And you can do this across all coins that have liquid derivatives contracts, liquid futures, and you start to see what this quote unquote risk-free rate is in the market. And right now, the risk-free rate is very, very high. And what does that tell me? It tells me people are really aping into these markets. There is demand for these markets generally on the long side with leverage, and that risk-free rate, that rate in crypto right now is elevated.
So you're able to take advantage of the exuberance in the market by basically, what is that, like fading the future towards the spot, or buying up the spot because you see the futures are in contango? Like,
yeah, it means that it means that if you have money on the sidelines, if you have capital that you can put towards what we call like risk capital, if you're a professional trader, like I was for 15 years at the CBOE and the CME, and you have the means and the capital, you can go put on some relatively risk-free trades in this market and collect a sizable rate of return. So it's kind of a call for risk capital. Come on, everybody. Come on, institutions. Come on, all you professional traders who are making markets and providing liquidity in traditional finance. Come here, and the getting is good if you know how to capture it. And that's the call, and that's why I think the signal is that more and more of that capital is going to flood into our space right now.
Do you guys see what I mean, though? It's advanced. This is advanced stuff that Rob's talking about. And so we're going to try to unpack it, and we're going to try to put some sense into it, because I've been listening to you talk to me about this stuff for months, and I've dabbled and I've looked, and you can see here, I've got my FTX screen up. That's probably the best place for this right now, because they offer everything you just described in one spot. And then if you even want to add in some of these exotics, these options, now with the partnership with FTX and Hxro, obviously you can just slide between the two wallets without any blockchain involved, right? So we've got to unpack this, man, because basically what you're describing to me is a high probability winner trade in an otherwise volatile market, and that's exactly the kind of shit I look for.
Well,
so if you guys have questions in the chat, please fire them off. All questions welcome. Don't ever stop asking because you're like, this will sound dumb, because I ask dumb questions all the time when Rob and I hang out. And that's the only way I'm going to get better at this. So you guys do the same.
It's funny. It's like these sort of trades and these sort of values that we see, the yield of risk, it kind of comes down to like the fundamentals of the market. And the market is really just one big competitive landscape where different assets, different instruments are competing for our money. You know, the public, people, we have trillions of dollars collectively, and we get to make decisions on where do we park that money? Where do we put it? Do we put it in a savings account? Do we put it in a trading account on Robinhood? What do we do with our money? And all the different stocks you can buy, all the different bonds, everything out there, it's all competing for our money. And people want to know, where's my money, going to be the safest? You know, that's rule number one. You need safety. You need to be able to value the security and safety. But number two, where is my best risk-adjusted chance of return? You know, what's my best risk reward? And that's that's what we're looking at every single day. When you scan your charts and you see, well, wow, this is right at my pullback level. This is the best setup that I can see right now, and that's flashing the light to me that I'm going to put some of my money into this play right now. And that's why I love your analysis so much, because you don't really care what it is. You have no personal tie to it. You're looking at your system, at your charts, at your math, and it's very clear to you when you should be putting money in certain coins in certain places.
Yeah, no, date it, don't marry it. Never been really that attached to a coin this year anyways, last year, but you know, so 2017, I fell in love with a lot of coins and they all did me dirty. So that's a lesson learned. And, you know, I hope that you like my style, because I do, we throw lots of ideas back and forth. I threw you ID last night. I'm so sorry I didn't send you a Uniswap link because you said, I didn't know where to find it, but it's 2x this morning.
So you just covered your gas fees then.
Yeah. Gas fees are covered. If you don't buy an ape-sized amount of something right now, your fees are upwards of 10 and 40%. You know, try to buy $500 worth of something on Uniswap right now. It's ugly, but you know, there's solutions coming. AVAX just launched their swap sort of protocol. It's an absolute clone of Uniswap, but it runs on AVAX. It's, you know, they got some interoperability, so you can trade AVAX tokens and ERC20 tokens. Should probably pull the name of that up now that we're talking about it. John, you might remember it. We were talking about it yesterday. CNG. Anyways, I'll find it today on the show. So like, I mean, what's next? I mean, okay, so I always hear you, and then we talk about, you know, futures and spot and options, and then I'm always like, oh, so like, what do I buy first? What do I buy first? What do I sell first? But let's go to the chat, because Kvark has a good question. He says, you're talking about the spread between spot and futures. Is that correct?
Yeah. Yep. That's the spread between spot and futures. It means that right now, if I had, I was sitting on $50,000 right now, and I wanted to go in, where would I could buy spot Bitcoin. I know where I can do that. Yeah. And then if I had a futures account, you know, let's say I was not in the US and I could be on FTX and I could trade the futures, you can see where the March future is. So you can technically buy the spot and sell the future. So you have a long position and a short position that would cancel out dollar for dollar. You can do it for the exact amount of dollars, and you wouldn't necessarily have any directional exposure at all. You're long the same amount as you're short, but over the next 44 days, you're going to collect that spread between where they're trading right now. And if it's $2,000 per Bitcoin and you put 1 Bitcoin worth of funds into this, then you know you're going to make that spread once expiration comes and the future marks to and expires to the cash spot price. So that is.
So it doesn't matter if the spot goes up to the future in the end, or if the future comes down to the spot, because that was always my confusion. I'm like, you know, how do you know which way it's going to go? Yeah, they'll meet, but is one going to visit the other or the other? You're just like, well, it doesn't matter. You just directionally take both, and eventually when they meet, there's profit on one side or the other.
Correct.
And then where's the value? Like if one, so I buy my spot.
Yep.
Well, never mind. I take that back. See, guys, trust me, guys, I got lots of dumb questions. But like the buy comes up, the spot, okay, the sell comes down. They're both in a little profit. Or if the market just drops, they drop together, but they still converge.
Yeah.
And then your short on the futures pays off while your spot position is underwater.
Right. It's the whole idea of convergence, right? So when I look at these things, it gives me an idea of where are the opportunities for my money. It's a relatively low. The only risk I really see with this, if I have an FTX account, the only real risk is if FTX kind of goes under, if FTX folds.
Systemic risk.
It's that systemic risk.
Yeah.
And there is another risk here, and it's called path risk. So let's just say right now, the March future is $2,000 above spot. Now, what happens if I put that position on? I put in 50 grand. I put it on one Bitcoin against one March future. Let's say in 2 weeks, I need that money for something, right? I'm like, you know what? There's an opportunity here. I need this money. I got to go put it in this other thing. Well, in between now and March 26th expiration, the future can trade way higher than spot than it is right now. So you might end up taking a loss if you cannot wait till expiration. Then you do have risk, because the spread might expand before it eventually collapses to zero. So, but if you don't have, you can allocate your funds to this until expiration, then it's virtually zero risk, except for the exchange and counterparty risk, which is real in this world. But I just trust Sam Bankman-Fried. I would trust FTX right now with that risk.
Okay. So yeah, you're really making a bet on the house to just stay solvent and present and out of jail.
Yeah. Yeah, exactly.
Okay. Well, that makes a whole lot more sense. So right now, if I can dumb this down again a little bit, like 46.8 is the future. If you guys are watching this chart here, the candles, this is the March futures. So you see BTC 0326, that's March 26. And there are, let's call it 2,000. It's about $1,900 of difference here. So if I buy one Bitcoin here on FTX and then I sell one Bitcoin contract, or one Bitcoin worth of this contract, I can just sit pretty, and when expiry goes through, how does this execute? Does my futures contract just close and like there's one, well, I don't know, there wouldn't be one Bitcoin in my account because I shorted it, but like, how does the settlement work?
So the futures contract will expire. It'll close. I think it's to a 1 hour TWAP. So you know exactly the time when it expires. And at that time, if you went out and bought a Bitcoin against this, at that time, you would just need to sell your Bitcoin out, the physical one, the coin, the spot, or when the March expires, you can then go sell a June future, depending on the conditions of what the June price premium is to spot coin. So you just need to make sure that once that short comes off, your short future, you have an open long on the spot. So you just need to close that out. And then you're
okay. So this future will settle and it'll have a P&L denominated in USD. So it'll be like, okay, this is closed now. You just lost 2K, but it's okay because your spot is up 2,500 or whatever.
Correct.
Okay. And can I assume then that this gap here is roughly what that trade will eventually pay off? In this case, $1,900. There'll just be $1,900 more capital in my, say, FTX account in this case? Is it equal to the gap?
Yes, if you are doing it one-to-one, if you are doing one full Bitcoin size, then yes, it would be the exact difference, from where you sold the future to where you bought the spot coin.
Sick. So if I have $90,000 here,
yep,
I can basically lock in $1,900 in whatever that is, 6 weeks. And all I have to assume is that I can trust the exchange to stay solvent until then.
Correct. Yep.
So where does that money come from? Who's paying for my $1,900, and why is it so easy? They obviously, again, asking these newbie questions. I'm sure other people are curious. Like, if this is so easy and so obvious, where is that money coming from? Where do they who gains from that?
Huh?
Is it like a liquidity thing where I'm kind of adding liquidity and that's incentivizing me, or is that a
This
big
is,
question? Or
yeah, no, I mean, this is what we call, this is the forward curve. This is kind of the beauty of derivatives. And when you start going out on the term structure and you start looking at instruments that expire at different times out, it brings to light this whole term structure of interest rates. And you get a sense of why and what things are trading out to different times. And it's not that it's coming from anyone in particular, but the pricing of this is very much related to other instruments out there. Like, take a look at the BTC perpetual future right now. So I'll tell you, that's probably trending positive, where if you want to be long the perpetual future, you're paying a funding rate every hour.
Yeah.
So
right now, 0.0032.
Okay. So 0.0032, and that fluctuates based on the perpetual future and how it, how it ebbs and flows, the order flow. But there's usually a close correlation to what the perpetual future funding rate is, and then what the futures, the actual March future, June future, the quarterly futures will be trading, because you could potentially, sometimes the perpetual pays crazy amounts where it ends up being even more expensive than just owning the future outright. And you can start extrapolating, okay, if this funding rate for the perp was 0.033 for the next 44 days, it was that every hour for 44 days till March expiration, that would really be a 70% annualized yield. And the March futures only trading at a 40%. So like, it's better for me to own the March. You can start doing very easy math and start seeing what is the best way for me to express my long view, my desire to be long Bitcoin right now. Is it to own the spot? Is it to own the future? Is it to own the perp? Is it to use leverage? And you can start really just looking at all the numbers, and you can easily make your decision what looks best here.
Okay. The funding rate's actually pretty low right now, I noticed. On FTX, it's lower than, Binance is 0.08, so it's like 8 times as high.
I saw a graphic. Someone said that FTX has seemed to have better funding rates over the last little stretch for like Bitcoin and ETH. So
yeah, I've been watching. I mean, for the first time recently on an ocean long on Binance this week, I was like, oh shit, like I just paid $335 in funding for the last 8 hours, and then the next morning I paid another $335, and and then suddenly I'm like, okay, that's significant. Thankfully it was moving fast enough that it was like, okay, it's up worth more to hold this, but it does eat you up. And so somebody asked here, funding rates ? Let me just check in on the chat here. Yep. Did me dirty. Yep. Okay, I'm catching up here. Why is this the case? So Brian asked, yeah, wait, so I could just make 5% with the spread right now, risk-free? And essentially, that's yes, risk-free being, again, if you ever take the money out early, you could be underwater through the trade at some point. And also, if anything ever happens to the exchange you're trading on, obviously there's your risk. It's a total risk. So you got to, we're vouching for FTX, obviously, partnered with them, really strong team, blah, blah, blah. But yeah, that's always on the table. I'm going to ask these questions next. Yeah, so funding fees, ? But on the futures, there are no funding fees. Like the perp swaps, yes. These futures contracts, no. There's no charge to hold them, right?
So there is no charge to hold them, but it's an implied funding. We just calculated the funding fee. You have to look at what is the difference between what that future is trading and what the spot is trading. And it's not that you're going to be paying that fee every hour out of your account, but if you're long the March Bitcoin future at 48,000, when Bitcoin spot is trading 46,000, and you plan to hold it, at some point you are going to be paying that $2,000 premium between now and March, because they will converge. So let's just think about, let's say the market was closed until that expiration day. And on expiration day, Bitcoin was 48,000. Well, if you owned the spot, you would have gained $2,000 because your 46,000 would go to 48. But if you're in the March future that you were long from 48 and you go to March 26 and it's 48, your P&L would be zero.
Yeah, so that fee ate it up, or that, like you say, implied fee. Premium. Okay.
Yep.
Do you do this? Is this something that can be done on other coins as well?
This is something that can be done on other coins as well. This is why I think FTX is the true innovator in the space and run the best exchange, because they started listing quarterly futures on a lot of altcoins, and to me it really lays a foundation for getting to more efficient markets for more digital assets. And it's it really enables people to get in. It's another form of borrowing and lending, really, and you can get a sense of a real market for this across many coins. So
yeah, I'm looking down their March futures now. They've got quite a list. So okay, just for fun, we got some really good questions in here. Guys said, "Talk Tix Wicks to me, baby," from Nathan Wissing, and I want to, because that setup I put out last weekend, I'll be honest with you guys, that was Rob. He's my rain man. I bring him to the blackjack table. He helps me set him up. I knock him down. We make a great team because he's from the US. He can't even play in his own playground. So I said, look, man, anytime you want to play, you just let me know, and I'll lay the bets for us, even though I get to keep all the winnings. So it's a really sweet deal. Don't tell Rob. But look, AVAX, the spot, this is the future. Okay, so spot is actually trading way above. So they're in backwardization now. The spot,
and you know why? I can tell you why, because there's got to be a token unlock coming before March expiration, which there is. I think the last token unlock for AVAX was the beginning of December. So that means, was it December or January? There is definitely going to be another unlock. So what the unlock people like to do, what futures let them do, is they can hedge their position. I mean, these AVAX people are in from dirt cheap, from 55 cents, 75 cents. So if they're about to get an unlock, they can get in there and sell the futures and hedge out their risk as the price goes up. So you'll see there, it's under, and that means that the perpetual funding, the funding on the perp future, will most likely be negative as well. Or
it is. Look at that. I'm telling you. Love hearing you talk. Okay, sorry. Continue. I get excited.
Yeah, no, I'm with you, but that's why derivatives, like, it's for this purpose. This unlock for AVAX is similar to the market that I hold near and dear to me, the corn market and the soybeans market, because you'd have a time where a whole harvest of a whole crop was being harvested. So you have this influx of all this new grain that you knew the farmers can't store everything. They've got to sell some of it during harvest. So you've got this event that's going to put a lot of supply on the market. So the futures would then trade lower there than cash usually. And
everyone's shorting it to kind of front run the supply dump, or
it's not even
shock.
It's not even front run, it's hedge. The derivatives markets were made for hedging, for protecting both sides, people who are growing it and people who need to buy it too, because there's a lot of companies that are going to need to buy that corn and soybeans. So there is a push and pull, but it's all about hedging risk. And that's, it's very clear in the markets as we look at them.
Yeah. So, I mean, that makes a lot of sense. And in this case, let's just say I've got 500,000 AVAX tokens. Okay, I'm rich, bitch. But they're not unlocking until March, maybe sometime during this month. And I see the price is way up. So I'm going to sell this future and essentially capture the price of it there. And if the price keeps going up, cool. My futures contract are underwater, but all those 500,000 tokens I have coming, they're going up in price. So I'm safe. But if price drops heavily before my tokens unlock, instead of just watching all that gain drift away, I'm short futures. I just protected my position.
Absolutely.
Okay. Okay. This is, you guys see this? Gears are turning. I'm getting this.
Because it's all about when that unlock happens, what happens? If you're someone who's going to take a profit and you know, like, you know what, I've got so much of my funds into this, I need to sell some. You can't sell those coins until they are unlocked and you have them in your possession. So as soon as they unlock, and let's say you were short the future, you can sell out your coins that are now unlocked and you can buy back your future. And it's the same. You've just protected yourself, and you've synthesized, you've created a structure to where you were able to protect your winnings, and you did it through an instrument that acted, looked, and felt just like having the coin itself.
Yes. Okay. This makes sense. Really starting to get this stuff, man. This is exciting. I hope you guys are enjoying this one-on-one tutoring lesson here with Rob. But I hope you guys are, learning some of this with us. We're going to look back at the chat. We got a lot of good engagement today, guys asking some great questions. Here we go. Linus says, what if the spot and the 03 perp meet midway? Zero profit? Question mark.
No, you still collect. So if they meet midway, that $1,900 difference or $2,000 difference still goes to zero. It doesn't matter where it goes to zero. It still goes to zero. So no matter where it is, you'll see a profit and loss on the future that could be positive and negative, and you'll see a profit and loss on your spot, and you'll know that the difference should be that $2,000 positive no matter where we are.
Yep, that makes sense. This will be in profit coming down. This will be in profit going up. Or this one will stay flat and this one will be in double the profit. Like, it really doesn't matter how you cut it. These guys will meet. And when they do, there'll be profit on both sides. It's kind of mind-blowing. And it seems like a fun game to play. If I have to put in, just say for the full one Bitcoin, that's like $90,000. And after a month and a half, so 6 weeks, I would get $1,900. So I'm going to get my quick math out. What is that in a percentage return?
Well, it depends on, because you wouldn't need the full. So you're doing it on 2 Bitcoin or 1?
Well, 1 Bitcoin on each side, I guess, right?
Yes.
Short one, long the other.
Yes.
On each. So 2, so 90K.
So you wouldn't technically need to add the other 40 or 50K, 45K on the other side, because if you own the spot Bitcoin in there, that will serve as your collateral, where you can sell the future against it because of the nature of how they move. You know that the value of your collateral, if Bitcoin goes down to 20,000, the system, they know that, well, he's long 1 Bitcoin and this short, he's going to be making 20,000. So he's fine. And on the flip side, if you're long your Bitcoin and you're short the future, if Bitcoin goes to 200,000 overnight because Elon Musk buys another 20 billion Bitcoin, then you know that your long Bitcoin is going to gain all that value that your futures position will lose.
So if they see you with those 2 positions, they don't really liquidate one or the other because they factor your existing P&L into maybe how far underwater you are. Is that
there's some fine tuning, but the bottom line is your actual US dollar value of your collateral. Like if you put in $50,000 and you buy 1 Bitcoin for $50,000, okay, you will then have, I think FTX gives you like 98% or 99% of the value of the Bitcoin, but your collateral there that was 50,000 US dollars coming in, if Bitcoin goes to 100,000, now your collateral value will also be 100,000. So it will also.
So you're not liquidated.
Correct.
Obviously. Yeah. Okay. That's a cool feature. I'm kind of like living on isolated margin on the perps that I trade, but this
Yeah.
is sort of more like a cross leverage type thing
This is
where it's
nothing to
all
this is
one
nothing to
pool.
just jump into, blindly for people who are new to this or just hearing about this. You got to read about this, you got to look into it, and do the math of how this will work before you just blindly do it. But it is a great tool. It's a more advanced strategy. But the best thing about even tracking this strategy or thinking about it is it tells you about that risk-free rate. It tells you about the market, kind of the market structure. What is the demand for coin and derivatives right now? If they're willing to pay you a lot of money, that means there's a lot of demand. It could mean that you're near a top, that it's getting really frothy, but it also could mean you're in the middle of a really powerful impulse like money flow move. So it could continue. You just never know, but these are things that the pros are watching very closely.
Yeah. Now I've read a little bit about backwardization, contango, using those to kind of get yourself an outlook on the next few months. But I've never really had a hands-on way to trade it. So I appreciate you kind of walking us through that today. Ultimately that's 2%, just over 2% in 6 weeks. But again, it's risk-free, right? You can't have a 10x if you don't want to take some risks. So for someone who maybe just made a whole bunch in the market and they want to stay in the game, they want to keep some skin in the game, but you know what? They want to remove some risk off the table, but they don't want to pay necessarily the tax on it yet. They don't want to take it out of the market theoretically. And this is how I'm thinking out loud. Obviously, like I could take a portion of this over here, short one future, long one Bitcoin. They'll meet in the middle. I don't care. I'm not looking at that money right now. Oh, look at that. $1,900.
Yeah, and it's about it's about 4%. It's a little over 4% over the next 44 days.
Oh, okay.
So, yeah, if it's 19,
I don't know. I did 1,900 divided by 90.
Yeah,
1,000.
1,900 divided by 45, because all you have to do
there it is. Yeah,
Bitcoin, and that's going to cover your margin on the future.
Forgot to factor that. Yeah, perfect. Okay, 4%, two times what I was kind of already thinking. Maybe that's interesting. Okay. Now, let's get back to the chat here. We got some really good stuff. Difference between spot and futures trading. Problem solver would like to know.
Difference between spot and futures trading. Well, for spot trading, any coin you want to buy, you have to have the dollar amount or whatever your US dollar tether or Bitcoin, whatever you're converting into that coin, you have to have the full amount. You can only buy one full Bitcoin if you have the $45,000 to buy that full Bitcoin. With futures trading, there is it's a collateral system, and depending on the platform and depending on many things, you fund an account, you put an amount of money in an account, whether it's a stable coin or Bitcoin or ETH, or FTX lets you put a lot of different coins and get collateral on it, and then you get to trade futures with leverage against your collateral. This is also a very dangerous game that needs a lot more study, a lot more research, because if you're getting into a position where you can take a bigger position than what your dollar amount will let you take in the spot market, there's risk there. And you could get a margin call, or you can get liquidated. So while there is this great idea of, I can trade at 10x leverage, and I think Bitcoin's going to go up, it's going to double in the next 6 months, so I want to take a 10 times levered position. Well, on the flip side, if it goes down 10%, which is not a lot here, before it makes its move, you're going to get a margin call and you're going to get liquidated if you don't put in more collateral. So,
and those margin calls, they happen fast. In fact, I've only been liquidated once in like a full-blown kind of position, and that's because I sized it tiny. I just did like 100x, for a couple $100. I was like, fuck it, full loss. But you check your email like an hour later, and it's just like margin call. Oh, liquidate. Like the emails usually arrive pretty close to each other.
Yeah. What the
I think on
auto
larger, slower moving positions, like if you have a short on Microsoft and you've got $10 million on it, they might give you a margin call. You got a few days, but
Yeah.
not in crypto. And what's interesting is, and Nick and I talked about this last year. You can actually see on the chart, sometimes it's like that 10% pullback. It's like, oh, they just liquidated the 5Xs. Oh, they just liquidated the 10Xs, the 25Xs. Like they know, where people's liquidation levels are. And I say they, I mean, the big guys who want to fill their bags with some size they can't just buy up. You will be targeted. And it's a mean mistress. I do futures trading probably, less than 10% of my trading. Because this market is so volatile, because spot coins, Uniswap, these things are so sexy right now. The bi-directional trading, I find, can be, aside from time consuming and expensive with funding, it can also just be really risky. I mean, it's just like, if coin 10x, why buy, why take my leverage on Bitcoin when I could find this like shit coin that's going to give me a free position overnight?
You're absolutely right. And I
So,
think the main takeaway, one of them, is that using futures, you can still structure some risk-free, fully collateralized trades where you don't have to worry about being liquidated. They are great instruments for that. Yes, do people lever up and use them that way? Of course. Do the majority of people who use them that way lose money? Absolutely, like the majority of them. So, but they are used often, and I think its biggest use case would be when it is collateralized, or it is used as a part of a trading portfolio as a hedge against something where you don't have risk of being liquidated. It's like over collateralized. So they're very useful in those cases. And it's also useful to follow it because it gives you, it's a barometer of the market and what is what's the juice in the market right now. So yeah, it can go both ways for sure.
Nice. Well, it's a little bit out of my wheelhouse, but it is something, obviously, having hung out with you long enough now to that it's like, well, this is an area that I'd like to expand my knowledge into. But I think you nailed it with the sort of the wrapping comment there around just risk and understanding. I think as a trader, you got to understand your limitations. Rushing into something, being told that I'm going to lose money trading leverage on BitMEX, and I still did it. And guess what? I lost money. This was in 2018. So, most traders I speak to, they get to a point where they're like, holy shit, man, I knew nothing. I cannot believe how little I understood about the market when I thought I was making a little money and I was doing some things. And then every single month, if you're in a learning kind of mode, you'll just look back on yourself a month ago and go like, holy shit, I'm so glad I still have my shirt, because, I was sitting on risky business. So I would recommend to anybody, keep watching, like listening, learning, taking some notes, fire up a little paper trade account, explore this stuff. But for God's sakes, man, don't rush in for the full amount ever. Always like to add that little comment. Do you see the chart I'm looking at here, Rob?
Oh my gosh, from 6 to midnight, just
sick. I want to just rewind a little bit as we're going to pivot into some altcoin stuff here. For anyone who wants a little more on that conversation we were just having, getting into the more nitty gritty options, ticks, wicks, futures, perps, all the crazy high level stuff. Rob has hinted that he would like to join more regularly, possibly on our entirely own stream, like a Tuesday or Thursday evening for us locally. So evening. So that'd be like, 5 hours later than this one or 3 hours later than this one. And we're just going to have, a nice little 30-minute options talk, and we'll come up with something. So if you guys are interested in this particular conversation, we are going to package it on a separate little stream we can do weekly. And then for Hxro Labs Live, we're going to be, the door's always flying each which way with guests and my usual banter in altcoins. So as we just kind of rotate into the second part of the show here, just want to point that out. So if you didn't get to your questions, guys, I apologize. I have a really I have an extreme case of ADHD. I cannot read the chat while listening to Rob, and I try to do both. So I appreciate it, and apologize if I missed your guys' questions. Rob, Q4 2020, you and I had a chat about AVAX, which was just looking terrible, boring, no volume, dying down. And you said to me that a little birdie whispered to you that in 2021, AVAX was going to be the coin to watch. And it was going to be one of the hottest coins of the year. And I took that seriously. And I saw this breakout and I saw this volume and I said, oh, it's what I've been waiting for. And I bought at 330. And then like later that week, I did something to my port. I was like, I'm just going to reset. I had too many shit coins. I wanted a total reset, total recalibration, figure out how much tether I have, like just get my shit together. And when I went to get all my positions back, I didn't get AVAX.
I bet.
And that is not the point of the story, but my God, what a call, bro. And I don't even care that I'm not on it as much as that it's just fascinating. Like there will be echoes to this, and that's the shit I'll catch. It's all good. Wow.
This is remarkable. It's crazy.
Like
it's crazy. I mean, it's like literally almost 20x in like no time. And that's why I don't want to hear anybody tell me ever with the market that something's impossible or no way or this and that. I mean, we watch fucking things mark up and completely get repriced. Like you're telling me that something was really different with AVAX from now to the end of December when it was like in the mud at $3. And now like it's miraculously worth $50 now. Like it wasn't the same. It's like reminds me of that thing about the Bears when they're like, the Bears are who we thought they were. They're a fucking great team. Like AVAX to me is what we thought it was based on a really smart guy that I know who told me like, this is my pick to click for this next year. Like put it down. And I listened to that guy and you know, there was some interesting stuff in this market. You could see, and I pointed it out on Twitter, and you guys can follow me on Twitter at Robbie Levy. And also we put it out a number of times on the Hxro Labs Twitter, but there was someone who sucked up a lot of liquidity back in December who they went and they would like buy up the whole book on Binance, like just gobble up everything like for 15 minutes straight, gobble it up, take it up 20%. And then it would come back down and it looked like a pump and dump, but it wasn't. It was actually someone literally soaking up as much supply as they could. They didn't care about taking it from $3 to $3.60 on several million tokens because they thought it would be $40 one day. So while it's stuck in the mud, they'll take as much as they can out of the market, take it out of the market. And then once it starts to go, guess what? There's not as much in that market, in the Binance market makers inventory to do anything about this. And then it just turns into a real shit show.
Yeah, I sometimes get fascinated to think, I mean, you know, I get some positions going, I got a big bag of pickle this week. It's doing well. And I'm like, oh man, like what a great gain. And then sometimes I just get fascinated to think like, who are these guys just scooping up 20 million tokens and then it just 50x's and they're just like, oh, just distribute this over. Like just to be in those seats is something, you know, I think it's a weird thing. You know, you don't get too many in-depth hands-on sort of documentaries about this stuff because guys who do that don't talk about it. You don't sit there and be like, hey guys, look at all the things I'm doing. It is such a competitive market at the highest level. But I'm always just fascinated by, you know, what it must be like to sit into some of those, you know, I always picture it being like this busy room with a handful of guys like The Big Short where they got the screens, there's 10 of them. They're like, we're soaking it up, make the call. And then, you know, and then it's just like, okay, release the hounds and like, look at this thing. So, and what's sick about crypto is that I have a feeling, you know, when you look across, let's just say, I don't know, ONT, because this is actually one that I got missed on today. Oh my God, look at this wick. Look at my alert. Look at this wick. Look at my alert. I almost got filled today on ONT. But look here. So, you know, you've got this dead market, blah, 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 through 2019. Then the big buys start coming in. And we always talk about this on the stream, the volume coming in. Is it just the same group of people for every one of these fucking coins and they're just getting 100x's off every coin for monster bags. Like who's getting and how rich? That's what I always want to know. It's crazy to think about.
It is. So look at, I sent you a link of a tweet, but those little volume spikes that you see there and how they correspond, it's always like, make notes of them. I always do, because I want to see, is there a pattern? Does it happen again? If it happens 2-3 times, like, and it's the same sort of pattern, then it typically could be a sign, and it might bring about a risk reward that really makes sense to to get into it. And like, better than anyone that the charts, that's your legend, that's your map, that you're looking for all the signs on there, and more often than not they're right there in front of your face, which you show just tremendously.
Well, I appreciate that. I mean, that's the one thing I love most on the chart is the volume. And it's because you can't really hide it, right? You can OTC, you can find other ways to acquire these coins. But if you're buying on this exchange, it will be showing on this chart. And when you're buying in size, when you're starting to, and like right here, okay, rejected. I don't think anyone in a size sense that was buying here is really worried about the next couple of months. They're like, okay, we'll push it up again. Okay, we'll push it up again. We'll push it up again. And then whoever's selling to them runs out and they push it up. And we're seeing this, I talked about this on the daily brief yesterday with Brian, and I've talked about it on Monday. Like there's so many patterns right now of these kinds of accumulation formations and then the breakout and the big volume. And this is how the big rallies start. And you saw it not as cleanly with AVAX. That one was kind of more like falling wedge, but this is the one I always like to go back to. And look at these charts. If this kind of shit almost makes me nervous, because I remember the last time I saw charts like this, and I don't think this is the end of the whole market, but the last time I saw charts that looked like this, it was like Dragon Chain 2018, for 25 cents to $5. And I remember at the time thinking like, oh yeah, that'll come down a bit, but it'll be fine. Well, it came all the way back. And so as a TA guy, I look at a chart, I say, well, that's got to get cleaned up someday. And then I just get a little nervous. Obviously, I don't play around with these coins at these heights because we're in a market where you can find the echo to these coins at these heights. And so I want to find coins that are here, boring as hell. No one's doing much about them. But we're in this market where the coins that have this little bottom formation, break out, retest, and go, you're in a market where like they're going, and they're going hard. And so I will tell you one I found yesterday that I think looks interesting in that sense. I don't, that's not, is that the one? Is that the one? KCS, exchange tokens are blowing up right now, by the way. I don't know if you have any, but if you don't, it might be late to the trade, but man, they look good. Okay, look at this, right? Doesn't matter what asset that is to me right now in this market. If I see this kind of thing, and then you see, even here, breakout, fake out, okay, back to the reload zone, breakout, retest, go. Me 6 months ago, I might look at this and say, oh man, I missed it, but I'll get the next one. Because I don't trust at that time maybe that the market's going to go absolutely bananas. I might think, oh, it's going to come up, and then, oh, maybe it'll go here, but then it's it. I missed most of the move. Now I see things like AVAX. We just looked at Elrond. We're seeing that we're in a market where these things can run so hard that even missing the first breakout, if anything, that's like you're reducing your opportunity cost, right? Mm-hmm. It's like, man, it's moving. It's moving right now. Pump chaser zone. Tag today. I don't have any funds on KuCoin, but I might move them over there because I was literally looking at this today like, got to take them while you got them. It's a special market right now. Let's look at your tweet that you put out with regards to AVAX. I remember this day. And you know what? I'm a skeptic. You told me this about Atom as well. You said somebody just bought $7 million of Atom in like one candle. Mm-hmm. And you said, like that's not Joe Sixpack. That's not some guy sitting on his couch. Like these are, that's somebody who knows something. That's somebody who's planning something.
And they bought spot. They wanted token. right?
Yeah.
They want token. They're not buying derivatives. They wanted the token. They bought it. They didn't really care. I mean, what pro gets in there and like apes a market up 20, 25%?
It
Like,
was here. Look, I still have it marked. That's hilarious. Look at this. Sorry, continue.
yeah. I mean, typically it could be really dumb, but you just have to make a note of it, and you gotta put it in your quiver, and that's a tool that a lot of times can lead to future events. And
So
yeah,
yeah, there it was. I believe it was November 1st. I feel like that was a weekend.
yeah, trade up to like
Uh,
510. I remember on Coinbase, they did it on Coinbase. They got in there, they aped it, and the funny thing about you saying how you didn't get back into the AVAX or you sold it out, but this was a time when the Bitcoin crosses for these things were ugly. They were
oh yeah.
still in a downtrend. So for you, which is not the wrong answer, for you, it didn't look as good as some other altcoins that maybe had a more constructive chart in Bitcoin terms and in Tether terms. So like
Yeah.
it just wasn't yet in your wheelhouse, which I think, if I'm remembering correctly, was one of the reasons you were like, I love it, I believe it. It's just it's not there yet, you know?
Yeah, well, I was, and that's been my admitted issue as a trader, is that sometimes I try to time things too carefully. You tell me this thing's going to be a banger, I believe you. I'm like, man, it is going to be a banger. I tried to get into the ICO on this, we missed the whitelist or something, like, we didn't make the lotto. There was no doubt in my mind it was going to have a good year, but I think that about so many coins, right? Dot,
Yeah.
Solana, Serum, like I've got free positions on all those because I did this. It just happened to be that day. I don't know what it was. I just like, I sometimes end up with like 25 shit coins and I'm like, everything's moving. It's all crazy. Like I don't have, my alerts set. Like I just get out of hand and I just reel it in. That's one thing I've learned to do is just reel it in, close them out. Most of them profit, some in loss, whatever, reset, and then kind of reemerge. And in this particular case, this one didn't make the cut, which, it's unfortunate. I gotta say, man, like things have been going so well. I don't even count the dollars, like there's one or two trades where I look back, I'm like, fuck. Like I'm counting that stings. But this one, honestly, it doesn't bother me. I mean, that's a little bit of progression, don't let that shit sting too much. Who knows what I did with the capital I didn't put into AVAX.
Yeah,
we've been doing some big things here. We've got some really nice moves. So
yeah.
not too bothered by that, to be honest. I think like, okay, let's look at ID. This is one, I mean, holy shit, 2.5x from yesterday, basically. Didn't do a big dive on it at all. I put something out on my Twitter to the effect of, was already bullish on this one. And then I hear Sam Bankman-Fried's basically joining the forces. I doubled down. That's it. That was the tweet. I think it was just on my phone at the time, but like, yeah, Everest ID, it's a big one, guys. I think it's a big mover. I don't know how to describe it offhand. I can share a few tweets. There's actually, okay, you know what I'll do? You know what I'm going to do? I'm going to get this thread right here. There it is. So check out this thread. Shout out to Nick, actually. He sent me this. You guys know Nick. He's got a few things he had to move on to, but he and I still chat, and he sent me this thread like an hour before the stream. So check out, it looks like 0x Rafi on Twitter. We should give him a follow because this is a really nice thread, and it basically takes you through what's going on with this coin. Why bullish? Why so good? I won't read the whole thing. It's a good thread though, and partnering with Kyber, with Aave, with a bank out of Papua New Guinea, FTX. It's got a lot going on for it. They launched the token late. They've been developing for a long time. So and I don't know, like I'm like, buy here, but thinking about it on pullbacks, I aped in, I doubled my position at one point, and I'd like to add to it again. I think the market cap is under 100 mil, and it smells like a multi-100 mil to me this quarter. So we'll see, but
I love that.
That's all speculation. Yeah, this one is a top of my radar for sort of, and it's looks like it's just climbing the ladder here. So let's see, maybe there's a little throwback here in the few, 60 cents, 66 cents. But yeah, let's get to the chat. Feel bad. I see the chat moving. I get so into speaking and listening and sometimes forget to check it. Sounds like selling put straddles. Yeah. Okay. We're going back to the options a bit. Would be great. Would be nice. Okay, good. So we got some guys that are looking forward to seeing you more on here. Rob does have a Twitter for the question you asked. It is at Robbie Levy. So ROBBYLEVY. And he plays ping pong. And AVAX 0.5 perfectly after that initial wave. Yeah. No, there was definitely look, that's the thing too, is there was a lot of opportunities to get in on this. And I guess, myself as a trader, always like, well, you know what? That thing's up here. ROI wise, I think I'm looking over here. I'm always just looking for that bottom breakout. And pretty soon I'm going to have to adjust because everything will be off the bottom. And so it's going to be about catching continuations. But yeah, that's it.
We can, I don't know how you are on time, but if they want a little Tix action, we can give them a little Tix action.
Yeah, let's look at Tix. You know what? Let's do it. Let's do it. There's so many altcoins to look through, but we've got you on here today. We've got the hour. We're just hitting the top of the hour here. So let's pull into Tix because that's, you're the man. You literally breathed life into this thing.
One thing I want to just touch on right now as we're, we're in real time, but you know how I tell you about the 2 hours, the time right before 4 p.m. Eastern when the CME is going to close at 3. That's when they take the snapshot settlements of all the futures. And the futures keep trading then from that 4 p.m. Eastern to 5 p.m. Eastern. But you get some moves into that close. And we just saw one, they sold off into the close. We saw something similar, I think, yesterday. But it's always interesting to watch the flow and activity around the close of the CME futures and then that next hour, because all the settlement and margin collateral stuff is dictated by the settles at 4 p.m. Eastern. But then during that next hour, people have time to then enter new positions, get out of position. There's a lot of jockeying that can be done there. And then that 1 hour between 5 p.m. Eastern and 6 p.m. Eastern where the futures are closed during the week. So there can be some real shenanigans there. And you can see some lows get made then, some highs. You can tend to see some moves then. And I'm just watching it right now, and it's happening again. But
yeah, we're getting some volatility today. Let's actually just pull that up live. What anyone's watching, they're not looking at the charts. Bit messy here. My range. I've drawn up a bunch of fibs. Let's get rid of some of the old range fibs here. Clean it up. Last breakout market structure formed technically here, so I would use this pivot low, kind of get a nice little relevant lower time frame fib. And as you can see this morning, just kind of coming into this pump chaser zone here. So not really a place where I would raise the alarm yet. Although, look, Elon Musk, news-driven tweet. How much of that kind of thing was already priced into the market? So this reaction is natural. How much of that does the market want to take back? Maybe too far too soon. Who knows? But look, we're in this huge range. Where's the bearishness here? If we're back into the range, back at the top of the range, I'm not too bothered with it. I guess the question to me is, are there charts that I'm bullish on that I want to be paying attention to this to fill? Because we're in a bull market. I'm not really in a position where I'm do I turn bear? It's more I got to train myself to stay bullish. Because it is kind of freaky when you look at your portfolio. If you're big on altcoins, you get a 10% drawdown and you're oh, must be a bear market. But really, look left, there's all those sick bids getting filled by guys that are, coming prepared. So the only one I can say I had that on before we get into Tix was ONT. Missed it by a pip today. So, we're working on that. I don't know that it has to continue right here. Could be dump. We're already we'll see. I'm not removing those bids just yet. Although sometimes I think if you miss that initial by a pip, if it comes back to that price, it's probably going a little lower. I don't know your experience with that, Rob, but yeah, I do get that sometimes.
I think that's kind of a coin flip. I mean, you look at stuff, you tend to have much better levels, because you look at levels so closely and you're all over it. So that probably happens to you because you're usually at the right level, right? I mean,
Try to be, yeah.
you're finding the level. Going back to one thing you said about this feeling of staying bull, right? And
Yeah.
it is a bull market. You're feeling bullish, looking for the bullish opportunities. That's one of the best aspects of using options, using things like Tix options contracts to kind of hedge your downside. Like if you own like a put, for instance, you can feel more comfortable about placing more aggressive bids at those levels on your pullbacks because like at least you are protected. You're going to get some payout if the market just crashes through. Those puts that you bought are going to pay you. So it's giving you protection. And like me as a professional options market maker, times that we bought options, it was mainly so we could trade futures better. It gives you that optionality we would call it gamma, but it gives you the opportunity to trade futures more aggressively or trade the spot more aggressively. When you own insurance, you feel better about making a fire in your living room, right?
Yeah.
Like
yeah. That's a good way to put it.
Yeah. So
it's kind of what I talked about last week with Scott. I've been talking about it a lot lately. Actually, I pulled out, but maybe 20% of my portfolio like a month or two ago. Basically, waited for January 1st and then did it. And at first, it was like, oh, like I think we're in such a bull market. But as soon as I did it and I placed it into certain parts, savings account here, trade account, stocks there, like whatever, retirement account. And then as soon as I did that, I was like, oh, clarity, right? It was like you're saying hedging, trading from that position where if it goes the other way, I'm okay. And that was my version of it. I'm not quite at the options level to necessarily buy up puts as a insurance premium. I actually know how to do it. I haven't folded it into my strategy yet.
Yeah.
It's level 3 over at TRI. So I did learn that. But how do we do that with Tix? I mean, last weekend, if you guys watch on Twitter, Real Hero Labs, we put out a little video last Saturday of how I was going to capture this Ethereum volatility. And it smacked like weirdly perfectly. It was a Wix at 1600, which triggered first. I think that the trade was opened here, and I had basically, I'm getting paid if price touches either of these lines before whatever it was, the 12. I mean, and as you can see, it was like, oh, Monday, bing, bing, double win. So I was fascinated by that. That's a trade setup you walked me through. And two questions, because it's really nice to know what works, strategies, and what, but I think a lot of people watching, myself included, were like, what now? Somebody asked here, does your friend that told you about AVAX have any other coins that he's into? A, and B, what are we looking at on Tix? What's hot? What's your mindset right now with, volatility? Is it cheap? Is it expensive?
Well, volatility in the vanilla options, like if you look at Deribit or something, volatility is high right now. It's high. And that means that the premiums that people are paying on vanilla options, on normal insurance, are high. And these are, to me, the best time, some of them to use the Tix contracts, because it's less of a premium. It's more, the contract expires to 0 if it's out of the money, and it expires to $1 if it's in the money. And between now and expiration, that contract trades somewhere between 0 and $1. So it's limited risk. If you're going to go sell a call option out there, you have to have enough coverage to where if that asset goes to $1 million, where you can be covered. So with Tix and Wix contracts, it's more like selling a call spread or a put spread, or buying a call spread or a put spread. It's defined risk, and that makes you sleep well at night.
Yeah, I love that. I mean, you can see here, I've got 2 positions left open still. I just size them at $500 a pop, and I can measure that very easily against my portfolio. I know exactly how much risk it is. It will never be more. $200, $100, $1,000 on the weekend play we did because it just looked really good. But
Yeah.
it seemed like a high probability. I was like, how do we get through this window without volatility? It'd be really, really strange.
So for that trade, where Ethereum was what? It was about $1,720 when we were talking about it.
Yeah.
Okay. So, it had this great run up and things were feeling positive, frothy, but we're still volatile. And we had the CME launch and everybody was talking about, whoa, well, we know what happened when the CME launched Bitcoin futures. That was the top. And that was the start of a 3.5 bear market. And that was like the narrative. So people were thinking about, this thing is going to drop. So a lot of people are positioning that way, which just builds into a more volatile environment. You can kind of tell we were going to see some fireworks. So with Ethereum trading at $1,715, the Wix contract was great because you took out a position that Ethereum will touch 1,600 before February 12th, which is Friday. And
yeah, I've marked it here on the green.
Yep. So you were giving yourself 6 days, which is a good amount of time for this event to play out. And what were the odds paying at the time on that Wix contract? I forget. It was
sorry, what
the odds.
I actually just got a message from Dan. By the way, TixWix, Hxro Labs, none of that stuff available if you are in the US. Just want to make that clear, guys. Apologize if you are. It's out of our hands, but it's just not available there. So
correct.
But let's continue. What were they trading at? The multiple on the Wix to down here, I think, was about 40%. So like a 1.47x.
Gotcha.
47%. Yeah.
Okay. So you were gonna, you entered into a contract that was going to pay you about 47% return if Ethereum did touch 1,600. That's a great position. If you own some Ethereum, you own some other crypto that moves with Ethereum. So you were entering into a position that would pay you if Ethereum went down sharply. If the rest of the alts went down, you would get paid. So it was a really good little insurance policy. If this thing happens to dump in the next 6 days, like I'm in a position where I'm going to make money on this trade. And you also took the TIX contract, which is based on settlement, right? You took the
Interestingly, that one actually paid more. As it turns out, it was 1,600, had to close below by this date. But my plan was, as I outlined in the video too, is, once it gets there, it was like a 30-cent contract. I was like, okay, well, once it gets to that level, even before expiry, it'll probably be trading at 50 cents. It'll price up to 60 cents and I'll just close it. It ended up being around 60 cents, I think, because I closed it down here or something. So it was like, it was 100% return, whereas the Wix, in that case, only paid the 40%. So interestingly, I thought the TIX actually paid me more, but I had to be present to close it. It wouldn't have closed for me. So that was I guess the caveat there. I had to be awake and I had the alert set and it was like, go close your TIX. And I went and did it.
Right. And those are great because that's the one thing, like the line in the sand that with TIX contracts, which are based on the closing, the settlement price at expiration. It's that if you're talking about a 46,000 TIX contract in Bitcoin or a 1,600 TIX contract in Ethereum, the place where that contract will be worth 50 cents, where the odds are 2 to 1, it's like a coin flip, is when the price is actually right at the strike. So if it's a 1,600 TIX contract, when Ethereum's at 1,600, that contract between $0 and $1, it's worth approximately 50 cents. So that if you buy that contract for 30 cents when Ethereum was 1,700, that it's going to be worth about 50 cents if I get the move down to 1,600. So in your mind, okay, if it's there and I close, this is what I'm going to be able to lock in. Or if it's there, I know I can buy in some Ethereum spot or some futures and then close my TIX contract. It gives you a lot of opportunities to take advantage of that dip.
I'm actually surprised. I mean, this is what we talk about too. If you see something and you're like, wow, that seems mispriced. Like I think this pays actually pretty well for me right now. Closing below 1600 at the end of the week. So that'd be like what? Actually, that's only like a day and a half now, but God, it's already Wednesday. But 7.5x, that's a 13.5 cent contract right now. If we even get down into this area at all, this might reprice into like 26, 30 cents. Get myself a 2x.
Yeah.
Or God forbid, it just goes right through to expiry and we get a nice dump this week for $100. Suddenly I'm looking at 7x. So yeah, sorry, I'm just like thinking out loud. I mean, I kind of like that idea. If on this bounce we fail this level, right now we're just kind of in a mini reload zone here on a bullish throwback. So I'm not really feeling the bear case at all, but it's there.
It is. It's great to just monitor because throughout the day, if you're trading and your exposure, your positions are changing throughout the day, it's really good to know where are things priced right now. If I needed to buy insurance, what do I need to pay? What's it going for right now? It's always good to have insurance or protection when you don't need it yet, because when you need it, it can tend to be a little too late.
Or it's very expensive.
And it gets expensive. You're right. So that's why it is good to just keep looking at it and know, like, if something comes out, if news comes out or whatever, okay, I know I need to go buy these things or I need to protect myself. If I can't sell my spot out or whatever, I know I can go here and take out some insurance or protect my position. So that's why it's always good to keep up with the prices like that.
And that's what I'm getting better at, is having, I have this tab open most days now and I just kind of review it in the morning. I find some of my best trades on here have come when the new daily comes out. Right. So, below 20K, Bitcoin hovered below 20K after pinging it, and then it just kind of consolidated below. And almost every day when I took the daily no for closing above 20K, I was getting paid, 7 to 25%. One day I got paid 42%. Bitcoin was trading at something in the 19Ks, and it was like, if Bitcoin basically doesn't wick to 20 today, I got 40% return. I was like, holy shit. But within an hour of that new daily contract launching, that was priced way down. People smashed it. So my one bit of alpha that I can share with this, that I've kind of discovered as my little edge, is I go on here and I look as soon as the new daily comes up, which I guess it just did. What time of day do they come up, Rob? What's like?
I think it's right at 00 UTC, or maybe 30 minutes after the new day. It should be very close to when the daily rolls over, which is 00 UTC time, shortly thereafter.
Okay, perfect. Yeah, I just look at it usually in the evenings for myself, Eastern time, but right when they come out. So I guess, as we are getting closer to the end here, what about selling calls and trading against it? Okay, Nathan Wissing with an options question. He says, what about selling calls and trading against it?
Selling calls and trading against it, one of the classic original option strategies of covered calls, covered call writing. And usually it would be you own the asset first, and then you sell calls against it to kind of enhance your yield. Where, let's say if you owned Bitcoin at 40,000 and you would sell the $50,000 call, and you'd be like, all right, if it goes up to 50,000, I'm happy with my gain. Let them have my Bitcoin. Just take it away. The trade will be done. Some people then, they won't let it roll off. They'll want to roll it to a different month. But it's, selling calls against your position. It's a fine strategy. What it does is you're limiting your upside, but you are also, you're getting some return or some premium for doing that. So at times you might, more often than not, it's not going to end up getting called away from you or going up to that level. But it can be an income producing strategy. You just need to know that if you're selling a call, like a vanilla call, it basically just, it caps your upside. And that's fine. And it's one of the most heavily used strategies out there, is selling a call against a position.
So you own some stock, sell a call against it, pay
yeah,
a little premium.
Yeah, you collect premium, and you don't have risk, because you can only sell the number of options or calls against what stock you own. So there's really no risk that it's going to run away from you. They'll just take your stock away, and if it closes below that level, you get paid. So it can be a yield enhancer. But
I've heard of covered calls before at some conference. I think I mentioned that to you last week. But
yeah,
again, just one other way to skin the cat. And it's probably why I find trading so fascinating, because you can just talk to 10 different guys that are all very successful and none of them do the same thing.
Yeah, there's so many ways to use the products. There's so much learning to do. I've been trading these. I was a market maker in the trading pit. I'm still learning new things about these markets every single day. I mean, literally, there is so much to learn. You couldn't even take it all in. So there's just, it's endless. But they are very, very powerful, very useful tools for protecting your wealth. Yes, they can be used to speculate also, and they're great for that. But the main thing is knowing what's out there so you can protect yourself, because shit happens, and it happens a lot, and you want to be you want to be sleeping well, and you also want to be in a position where if the market shits on itself, where you can actually maybe get in there and buy the dip.
Yeah, no, absolutely. I'm just looking at the 100K June contract. I mean, if it doesn't hit 100K by the end of June, I can collect 13%. Just if I want to play the bear, I don't even know if I want to take that bet, to be honest. 13 cents on the dollar just to not hit 100K by the end of June, but it's there. I love the product, I got to say. It's the first time I've seen something new in the market that really excited me. So, but here I am, just fired up about TixWix, and you're going to be on here next week with us. We're going to pick a new slot. Did we lose Rob? Oh, no. Oh, we lost Rob. That look in his face, that was the perfect look, especially given what I'm drinking right now. House plant. Oh, wait, Rob's back. Wait, the boss is back. I'm not drinking that. What I was saying, just as you left, is just kind of plugging our new show. We're going to get on here and talk this on a separate slot so that we can still have Hxro Labs live 3 times a week, and also a little options Rob in the house to maybe explore some TixWix ideas, strategies. Does that sound good?
I love it. Right. There's honestly, like, just learning about it, just getting some knowledge on it on a base level, reading, going and studying it can light some things up in your brain about the risk in the market, and just about how to improve your game when you're looking at the market, how to approach it. It's growing. I mean, this year we had our first day ever where the number of options traded, this was in the US for equity options, and the number of options traded was greater than the amount of stock traded that day. And that's remarkable. I mean, these instruments are powerful, they're useful, and it's good to start thinking about it, mainly for protection.
Yeah, no, as a hedging tool, and that's something I need to get into more. I've been using it right now as I'm going to make some money tool. But I think over the next couple of weeks, talking to you on here, I'm going to get you to walk me through it, and we'll play with some real numbers. I got my account here. I've got actual funds in the wallet, so maybe we can actually walk me through hedging a portion of my portfolio live. because I want to hedge a portion of my portfolio, and I want to know how to do it here the right way. And so we'll bring that to you guys live next week. Let's do it. Let's just hope the asshole doesn't fall out of this thing before I get my hedge on next, whatever, Tuesday, Thursday. So, don't dump the market on us, guys. Icon, Luna, ADA, couple of names being thrown out in there. AVAX and Solana, if you have time. Guys, we are going to wrap today. Might get on, definitely going to be on Friday doing a full rundown. I'm going to put out a market update video, and we're going to do community coin of the week tomorrow morning. So get us on Twitter at Real Hero Labs. Put in a request. I'll add it into the market update that day if I didn't get to it today. Appreciate you guys showing up today and joining us. So we'll do some coin requests tomorrow on Twitter, and I'll do them in video form as well. So hope you guys all had a wonderful day today. Thank you so much for joining us today, Rob.
Yeah.
We'll be back on next week, talk a little more tick swicks and options. And if you guys want, just ping us on Twitter even before tomorrow. I'll be around a little later tonight. Got some chart requests. I want to look at everything you guys are asking about because it's usually a fire idea. I actually just looked at this guy. Demacia says buy ADA. I looked at the chart. It looks like it's breaking out of a flag after a blow up. So yeah, I'm looking at ADA right now. Guys, have a wonderful day. Whatever you do, until next time, always play from a position of strength.